Consumer durables manufacturer Polycab India ended FY22 on a very impressive note with highest ever top line in the March quarter. The company continues to maintain market leadership in wire and cables business, and it's gradually gaining foothold in the consumer durables market as well. Polycab witnessed a top-line growth of almost 35% year-on-year, mainly driven by strong performance in the wires and cables business. However, operating margins declined to 12%, a degrowth of 175 basis points year-on-year on account of higher raw material prices. Though sequentially, margins improved by 130 basis points on the back of price hike taken by the company. Wires and cables business revenue jumped 39% year-on-year to 3,540 crores, led by strong demand for housing wires across the real estate market. Although demand for cables was briefly dampened by volatile aluminum prices, the company retained its position as the market leader with a 22 to 24% share in the organized market. Margins of the segment improved by 130 bps QOQ to 10.3% as price hike was passed on to the end customers. Demand outlook appears robust as business is gaining traction in several end markets including oil and gas, renewables and steel, in addition to conventional growth in wires and cables from construction, utilities and communication sector. Fast-moving electrical goods or the FMEG business saw a modest rise in revenue owing to high inflation. Fans, lights and switchgears delivered healthy growth. Conduit pipes also showed positive momentum. In contrast, switches saw a decline due to supply chain disruptions. However, margins for the segment were once again under pressure due to higher ad spends and cost inflation. The company plans to scale the business further by expanding distribution and broadening its product portfolio. It's building a new capacity in Daman to manufacture switches in-house and aims to reach 12% EBITDA margins in the next 3-4 years. Management has guided for an annual capex of 350 to 400 crores, of which two-thirds would be invested in the cable segment. The remaining amount would be spent on plant maintenance as well as building capabilities in products where utilization is very high. If the company decides to foray into new areas or make any inorganic acquisitions, there can be additions. Polycab remains optimistic on gaining market share across categories and improving profitability. The company is augmenting its distribution network and has increased the number of authorized dealers and distributors to 4,600 in FY22. Also, its network of retail outlets has increased by about 25% year-on-year, reaching a number of 2.05 lakhs. The channel and distribution network are used by the FMEG section to the tune of 54%, the wires and cables business to the tune of 21%, whereas 25% is used commonly by both segments. Polycab recently launched a new sub-brand called Etira to strengthen its presence in the semi-urban and rural market. It has introduced housing wires under the Etira brand to gain share from the unorganized sector. The company is eyeing a turnover of 20,000 crores by FY26 and is strengthening its management team to scale up different verticals. Volumes in the wires and cable segment should be fueled by revival in real estate sector and a rebound in private and public capex. Even though FMEG volume growth in FY22 was underwhelming, ongoing investment in brand development, team growth and distribution network improvement should produce strong growth from FY23 through a number of Project Leap related activities. The business is on track to consolidate its leadership position in the consumer durable industry and is well poised to navigate any macro headwinds owing to stable cash flows and a cash-rich balance sheet. Despite a robust financial performance in recent quarters, shares of Polycab India have traded sideways for the past 12 months. At the current price, the stock is valued at 30 times FY23 projected earnings. The company's fundamentals remain solid and the overall market cap of the business is also quite reasonable in the context of the overall opportunity size in the consumer durable and electrical industry. Growth outlook for the business is promising and investors can therefore look to build positions in Polycab during market corrections.